Have you ever wondered how the Indian stock market works? Our journey begins in the late 19th century, when the Indian stock market was born. It's one of the oldest in Asia, with a history as rich and diverse as India itself. Fast forward to the present day, and it's an ever-evolving landscape of opportunity, a bustling hub where buyers and sellers come together to trade shares of publicly listed companies. Think of it as a colossal marketplace. But instead of fruits and vegetables, we're dealing with stocks, bonds, and derivatives. It's all about the exchange of ownership in companies, from conglomerates to promising startups, all happening in real time, creating a vibrant ecosystem of economic activity. Now, let's talk about the heart and soul of the Indian stock market, the Bombay Stock Exchange, or BSE, and the National Stock Exchange, or NSE. These two giants are the primary stock exchanges in India, and they list thousands of companies. These companies range from multinational corporations to local businesses, each one contributing to the pulse of the nation's economy. But what's a stock exchange without its shares? Here's where it gets interesting. Shares represent a fraction of ownership in a company. When you buy a share, you're essentially buying a piece of that company, hoping that its value will increase over time. It's a game of anticipation, strategy, and timing. And then there's the fascinating world of technical analysis, where traders study market behavior to predict future price movements. Imagine being able to read the language of the market, deciphering patterns, trends, and reversals. It's like cracking a financial code, where each candlestick pattern or trend line tells a story about the market's mood. We'll also delve into the significance of the Nifty 50 and the Sensex, the benchmark indices that reflect the overall health of the stock market. These indices are like the stock market's pulse, and when they rise, it's like the market is cheering. Indeed, the Indian stock market is not only about buying and selling shares, but also about understanding the language of the market. It's a world of endless possibilities, where every day brings a new opportunity to learn and grow. Imagine if you could read and decipher the language of the market. This is where the art of technical analysis comes into play. It's a method that traders use to predict future price movements based on historical data. It's like a crystal ball, but instead of magic, it's grounded in numbers, charts, and patterns. Now, let's delve a bit deeper. You might have heard of candlestick patterns. Named after their visual similarity to a candlestick, they are graphical representations of price movements in a given period of time. Each candlestick tells us a story of the market's sentiment. It's like reading a book where each page reveals the market's emotions: fear, greed, hope, and despair. But the market doesn't just speak through candlesticks, it also communicates through trends. A trend, in simple terms, is the general direction in which the market is moving. It can be upward, downward, or sideways. Identifying these trends is crucial for making informed trading decisions. It's like understanding the mood of the market. And then there are reversals. As the name suggests, a reversal is when the market changes its direction. Spotting a reversal is like catching a wave just as it's about to turn. It requires skill, patience, and a keen understanding of market dynamics. But remember, technical analysis isn't a guarantee of success. It's a tool, a guide, a compass. It can point you in the right direction, but the journey and the decisions are up to you. So how do you master this art? Well, it takes time, practice, and a lot of learning. But don't worry. In our upcoming videos, we'll be diving deeper into the world of technical analysis, demystifying its concepts, and helping you become fluent in the language of the market. Reading the market is like deciphering a financial code. And once you crack this code, the world of trading opens up with endless possibilities. Stay tuned, because this is just the beginning of our journey into the heart of the Indian stock market. Are you a thrill seeker or a long-term player? That's the question you need to answer when deciding your trading strategy in the stock market. If you're the kind who loves the adrenaline rush, then intraday trading might be your game. It's all about buying and selling stocks within the same trading day. The goal? To profit from short-term price fluctuations. It's like being a hawk, always on the lookout for your next prey. But maybe you're more of a tortoise than a hare. You're not after quick wins, but steady growth over time. In that case, long-term investing or delivery trading could be your style. Here, you buy stocks and hold them for an extended period, often years or even decades. It's like planting a seed and patiently waiting for it to grow into a mighty tree. Now you might be wondering, is it just individuals like me trading in the market? The answer is a resounding no. The stock market also hosts institutional investors such as mutual funds, pension funds, and insurance companies. These big players pool money from various individuals and invest in a diversified portfolio of stocks. It's like going on a group adventure where everyone shares the risk and the reward. Institutional investors play a crucial role in the market. Their large-scale trades can significantly influence stock prices. However, they also bring stability to the market by investing for the long term. It's like having a steady hand on the ship's wheel amidst the stormy seas of the stock market. And let's not forget about the hedge funds. They're another type of institutional investor, but with a twist. Hedge funds use advanced strategies like short selling and leverage to deliver high returns. It's like being a daredevil, pulling off complex stunts to wow the crowd. Whether you're in for a quick profit or long-term wealth, there's a strategy for you. So, are you ready to dive into the exciting world of stock trading? Remember, every investor has a unique journey. Find the strategy that suits your style and let the adventure begin. Ever heard of derivatives or IPOs? They're not just jargon. Let's embark on a journey to understand these fascinating aspects of the stock market. Derivatives and initial public offerings, or IPOs, play significant roles in the financial ecosystem, offering a myriad of investment opportunities. So, what are derivatives? In simple terms, a derivative is a financial contract that derives its value from an underlying asset. Think of it as betting on the future price movement of an asset, which could be a stock, bond, commodity, or even a currency. There are various types of derivatives, including futures, options, swaps, and more. The beauty of derivatives lies in their versatility. They allow investors to hedge against potential losses, speculate on future price movements, and even access assets that might be difficult to trade directly. Now let's turn our attention to IPOs, initial public offerings. An IPO is a significant event in a company's life. It's like a debutante ball where a company steps onto the public stage for the first time. During an IPO, a company sells a portion of its shares to the public. This process helps companies raise capital for expansion, debt repayment, or other business needs. For investors, IPOs represent an opportunity to get in on the ground floor of a potentially successful company. But remember, with great opportunities come great risks, so always do your homework before investing in an IPO. In essence, derivatives and IPOs add layers of complexity and opportunity to the stock market. They allow investors to diversify their portfolios, manage risks, and potentially achieve higher returns. But as with all investments, understanding the mechanisms, risks, and rewards is crucial. Derivatives and IPOs are pathways to advanced trading and exciting investment opportunities. So are you ready to explore these pathways and unlock the potential of the stock market? Remember, the journey of 1,000 miles begins with a single step. Make that step count. Ever wondered who ensures fair practices in the Indian stock market? Without missing a beat, let's talk about the Securities and Exchange Board of India, or as it's more commonly known, SEBI. SEBI is the mighty watchdog of the Indian stock market, tirelessly standing guard to protect the interest of investors and ensuring the integrity of the market. Established in 1988, SEBI's primary role is to regulate the securities market in India. It oversees the functioning of stock exchanges, brokers, sub-brokers, portfolio managers, basically all the key players in the stock market. It's like the traffic controller of the bustling financial highway. SEBI also regulates the issuance of securities, promoting transparency and fostering a healthy investment environment. It's like the guiding star, ensuring a fair and efficient marketplace. But that's not all. SEBI also educates investors, helping you make informed decisions. It's like your personal tutor in the world of stocks and bonds. With SEBI, you're in safe hands. So ready to step into the intriguing world of the Indian stock market? Let's do a quick recap of our journey through the Indian stock market. We began by understanding its roots, the bustling hub of financial activity where shares of publicly listed companies are traded. We then delved into the world of technical analysis, learning to decipher the market's language through patterns, trends, and reversals. We explored various trading strategies, catering to both the thrill seekers and long-term investors among us. We also discussed the role of institutional investors and the diversification they bring to the table. Then we navigated the exciting avenues of derivatives and IPOs, and finally we acknowledged the pivotal role of SEBI, the watchdog ensuring fair practices and protecting investor interests. So, that was a sneak peek into the thrilling world of the Indian stock market. Whether you're a seasoned investor or just starting out, there's always something to learn and explore.